Hello, I'm Laura Anderson, OSCR's Head of Professional Advice and Intelligence. Today I'm going to provide for you an overview of the charity accounting rules that apply to Scottish charities. Today's agenda. We're going to start with the basics. Every charity has to prepare a set of accounts each year. We're going to look at the two types of accounts that can be prepared. The first is receipts and payments accounts. The second, accrued accounts. We're also going to look at the trustees' annual report. That's the narrative part of accounts that have to be included regardless of whether you're doing receipts and payments accounts or accrued accounts. And then we're going to finish off by looking at the external scrutiny of accounts. Every set of accounts has to be externally scrutinised by someone who is independent of the charity. We'll look at that later on. Let's cover the basics then. As I said earlier, every charity has to produce a set of accounts each year. Ordinarily, the accounting period will be 12 months long, but on occasion it can be shorter, but it can't be less than 6 months, and sometimes it might be longer than 12 months, but it can't be longer than 18 months. Accounts are filed with OSCR within 9 months of the charity's financial year end. Accounts are normally filed using our electronic portal, OSCR Online, and that enables the charity to file its accounts and to complete its annual return all at the same time. We're now going to start to look at the different types of accounts that can be prepared. The first one we're going to look at is receipts and payments accounts. After that, we'll look at accrued accounts. Receipts and payments accounts are the simplest form of accounts. They're really about cash-based accounting, what the charity has received in the year and what it has paid out in the year. There are 5 basic elements that are included in a set of receipts and payments accounts. The first is the receipts and payments account itself. This is where the receipts, that's the money that the charity has received in the year, are listed. And the listing will be split between the funds that are unrestricted for any purpose that the charity holds them for, and restricted funds, which is where the charity perhaps has received money for a very specific purpose or a specific project. Those have to be shown separately. The receipts are then compared against the expenditure for the year, the payments that have been made. The difference between the receipts and the payments will result in the surplus or deficit for the year. So where the receipts are greater than the payments for the year, there'll be a surplus, and where the payments have been greater than the receipts, there'll be a deficit. The next element is the statement of balances. This is where the difference between the money that the charity has in its bank and any that it holds in cash, the difference between what it holds at the beginning and the end of the year is explained. And it's explained with reference to the surplus or deficit that comes from the receipts and payments account. What this means is that the balance at the charity's bank account at the start of the year will have the surplus added to it or the deficit taken away from it to then show the balance that it has in the bank account at the end of the year. The statement of balances will also list any other assets or liabilities that the charity has. For example, if the charity was a play group and it also had some play equipment, it would include the play equipment on its statement of balances along with the value of that equipment. Similarly, if the charity has any liabilities at the year end, for example, perhaps it's received an electricity bill before the year end but it hasn't paid it until the next year, it would include that on its statement of balances. And this will enable anyone who's looking at the accounts to properly understand the financial position of the charity. The next part is the notes to the accounts. There are a small number of requirements for notes to the accounts for receipts and payments. The main one that normally applies to every charity is trustee remuneration. This is where the charity must explain if it's made any payments to its charity trustees in the year. And even if it hasn't made any payments to those charity trustees, it must explicitly state this. The fourth element is the trustees' annual report. That's the narrative part of the accounts, and it's the charity trustees' opportunity to tell the story about what's actually happened in the year. We're going to look at the detailed requirements for trustees' annual reports later on. Lastly, we have the external scrutiny report. We're going to cover external scrutiny in a bit more detail later on. But at the moment, all I'll say is that external scrutiny is normally an independent examination for a set of receipts and payments accounts. External scrutiny is really just where someone who's independent from the charity trustees will look at the accounts to make sure that they're properly representing what's gone on during the year. The next type of accounts that we're going to look at are accrued accounts. Accrued accounts are prepared in line with the methods and the principles that are explained in the Charities Statement of Recommended Practice, or the SORP as it's commonly referred to. The SORP is based on UK accounting standards. So they're the same types of accounting standards that companies that are run on a commercial basis will prepare, but there are some differences that take account of transactions which are very specific to not-for-profit organisations and charities in particular. The key difference between accrued accounts and receipts and payments accounts are that adjustments can be made in accrued accounts for timing differences. So, thinking about that electricity bill that we talked about earlier that a charity might have received before its year end but not paid until after the year end. In a set of receipts and payments accounts, there wouldn't be any adjustment made, so that bill wouldn't show because it hadn't been paid until the following financial year. But in accrued accounts, an adjustment would be made because the bill has been received in that current financial year, and so a liability would be brought in to account for that. Some of the requirements in accrued accounts vary depending on the size of the charity. In the main, this means that very large charities, that means they have an income of more than £500,000, they have some more detailed requirements to comply with. Specifically, they have more disclosure requirements, and also they have to produce a cash flow statement. Let's look at the different elements that are included in accrued accounts. There are 5 main elements that apply to everyone who's doing accrued accounts. The first is the statement of financial activities. This is the main income and expenditure statement, where the charity's income and expenditure is listed. There are specific categories that each item of income and expenditure have to be fitted into, and there will be different columns for unrestricted and restricted funds, as well as a total column and a column that shows the comparative figures for the previous accounting year. The balance sheet is the next one. The balance sheet is where all the assets and liabilities that the charity have are listed along with their values. So for example, if the charity owns land or buildings or has investments, all of that will be included in the assets part of the balance sheet. If it has liabilities such as bills that are unpaid at the year end, or it has longer term financial contractual commitments, then those would be included in the liabilities. The bottom half of the balance sheet will show how the assets and liabilities are split between unrestricted, restricted funds and any endowment funds that the charity might have as well. The notes to the accounts are the third element. The notes to the accounts provide a lot more detail about some of the summarised figures which are found on the statement of financial activities and the balance sheet. Normally there will be note references on the face of the statement of financial activities and the balance sheet, so that where a reader of the accounts is interested in finding out a bit more about a specific figure, they know where they can go and look in the notes to find that information. There are specific requirements for what has to be included in the notes. So similar to receipts and payments accounts, there have to be notes, for instance, about trustee remuneration. There also have to be notes that explain in more detail about the breakdown of income and expenditure, breakdowns of the assets and liabilities between unrestricted and restricted funds. And there's also information required to be provided, for example, about any pension scheme arrangements that the charity might have. The next element is the trustees' annual report. Remember, this is the narrative part of the accounts where the charity trustees tell the story about what's actually happened in the year. We're going to talk a bit more about the trustees' annual report in a moment. Then there is the external scrutiny report. That can be an independent examination or an audit, and we're going to look at those requirements a bit more fully later on. If the charity is large, so that's if its income is more than £500,000, then it has to also produce the cash flow statement. Now, the trustee's annual report has to be prepared, as we said, regardless of whether the charity is doing receipts and payments or accrued accounts. The trustee's annual report is the opportunity that the charity trustees have to tell the story about what's happened in the year, and it is the easiest part of the annual report and accounts for every charity trustee to feel really involved in contributing to. The trustee's annual report normally starts off with explaining who's in charge of the charity and how the charity is actually set up. So the names of each charity trustee will be included, and the information will be there about how the charity is legally set up. For example, whether it's a company, it's a trust, an unincorporated association, or perhaps it's even a Scottish charitable incorporated organisation or a SCIO. It will include that information, and it will explain generally what the governance arrangements are within that charity, i.e. how it makes decisions. It will also explain about the purpose that the charity exists for, and then that will set the context for the explanations that then follow about the activities that the charity has actually carried out during the year that contribute to how that purpose is actually delivered. Ordinarily, there'll also be commentary on the finances of the charity. Essentially, it's an opportunity to make sense of the numbers in the accounts, and it's really important that the information that's in the trustee's annual report integrates really well with the financial information that's provided. There'll also be information about probably the charity trustees' plans for the future. What are they planning to do next year and in subsequent years to contribute to the delivery of the charity's purposes? The minimum requirements for the trustees' annual report are set out in law. They're set out in the regulations for charities doing receipts and payments accounts, and they're set out in the SORT for charities preparing accrued accounts. But a lot more information can also be provided over and above the minimum requirements. We come on then to look at the external scrutiny of the accounts. Every set of accounts must be looked at by a person who is independent of the charity trustees. The purpose of the external scrutiny is to allow assurance to be given to any reader of the annual report and accounts that the accounts are properly reflecting what has actually happened in financial terms in the charity during the year. There are two different forms of external scrutiny. The first is independent examination. That generally applies to smaller organisations. Independent examination can only happen for a charity that has an income of less than £500,000. Audit has to happen where a charity's income is £500,000 or more. There are also some different requirements depending on the size of the charity's income below that £500,000. So for instance, if the charity is preparing receipts and payments accounts, it will mean that its income is less than £250,000. In that situation, the independent examination can be carried out by a person who has the requisite skills. This really means that the person needs to be able to understand a set of accounting records, a set of charity accounts, and the relationship between those two things, to provide a form of assurance that the accounts are properly representing the accounting records and the transactions of the charity during the year. If the charity's income is between £250,000 and £500,000, the charity needs to have an independent examination, but it needs to be carried out by a qualified accountant. So in this situation, the charity will be preparing fully accrued accounts, because receipts and payments accounts are only able to be prepared up to £250,000 income. So where fully accrued accounts are prepared, the income is between £250,000 and £500,000, an independent examination can happen, but it needs to be by someone who has a professional accounting qualification. The person needs to be a member of one of the recognised professional bodies, and those bodies are listed in our guidance. Where audit happens, that's where the income is £500,000 or more. That job has to be carried out by a statutory auditor. There are also other criteria that affect whether independent examination or audit can be carried out. Income's not the only factor. For example, if the charity has net assets of £3.26 million or more, then an audit must be carried out, and that is the case whether or not the charity has income of less or more than £500,000. The constitutional requirements of the charity are also really important here. Sometimes the constitution of the charity might specify that an audit has to be carried out regardless of how much income the charity has. If that's the case, then even if the income of the charity is less than £500,000, then an audit needs to be carried out. There are also other factors that the charity might need to consider. Sometimes funders will set specific obligations for charities in terms of having an audit where perhaps their income level wouldn't actually require this. And that's maybe something that charity trustees need to think about when they're seeking funding. Where can you find out more information? In our guidance section on our website, there's now a specific accounts and finance guidance section, and that has lots more information. Specifically, there's a guide to charity accounts which will provide you with an overview, similar to what I've provided you with here today. There's also a receipts and payments accounts work pack, and that's has templates in it to help anyone doing receipts and payments accounts to make sure that they get all the required content correct first time. We've also got guidance about trustees' annual reports that really explains how you get involved in preparing the narrative story of the charity during the year. And there are also links to the charity statement of recommended practice, that's the SORP. You can download the SORP in full via the link that we have to the charity's SORP website, and you can also download the individual modules of the SORP if there's something very specific that you're looking for from that web page. In terms of how you can keep up to date, we'd really like for you to sign up for our e-newsletter via the OSCR website if you haven't already done so. This is a really handy way for you to keep up to date and in touch with everything that's going on. Please also look out for some future webinars on charity accounts. We're planning on doing some more on the topics that I've covered very briefly here today, and if you're interested, hopefully they'll be appearing soon. But please also, if there are other topics that you'd like us to consider doing webinars on, please contact us and let us know. You can email us on info@oscar.org.uk or tag us on Twitter. You can find us on other social media as well. Please let us know what you think. Thank you.